Analysts at EDC Securities say banking stocks are regaining attention as investors expect dividend payouts, although most are yet to release their unaudited full-year earnings. Joshua Chinga, Side Analyst at EDC Securities, joins me now for more on this discussion. Joshua, thank you so much for joining us on the show today. Banking stocks are regaining attention here, and it's on the expectation that we're going to see the dividend payout. We've seen a couple of full-year earnings for other sectors, and a whole lot of focus is now also moving towards Q1 performance as we're wrapping up the month of March. But let's take a look at what's driving the interest here towards banking stocks. Basically,
investors are, thank you very much for having me, pardon me. Investors are currently looking at trying to take positions to take advantage of dividend earnings from these banking stocks most especially. And we've been seeing a whole lot of activity play out on Zenith and GT as of last week. We even down up until yesterday, we started seeing some profit taking on GT and Zenith. However, we know that other banking stocks such as FCMB, Wema and the likes also have started gaining some attention. So we believe that investors are just trying to position for dividend taking, basically.
And also, as we're also looking at the first quarter earnings expectations now, because this is the season of earnings forecast as well for Q1, we also saw the print of numbers, FX losses, and it's also big to also highlight that the month of February was one of the biggest register of Naira devaluation like we've not seen in recent times as well. Now, how do you think this would also affect investment sentiment on these stocks?
The impact is going to be really, really massive, especially for stocks that have high level of dollar exposures right now. And it's no surprise that we will begin to see that investments will start to move away from companies that are really FX dependent and have some of these debts in FX basically on their books, because what that means is that it's going to expand their cost. Their net finance cost is going to really expand, and it's going to affect profit margins significantly.
And what's playing out here as well now, we're seeing SEC decline in PZ Cousins' shareholders buyout strategy, and then the bigger picture, delisting plans.
Yes, and that gives a broader context of what is really going on in the consumer goods space now. For example, like PZ, knowing that most of these multinational companies that do exist here in Nigeria tend to want to support their Nigerian counterparts by giving out these facilities. And PZ, currently now, with such having a net negative net operating asset position as at November, it was a very big concern. So they were smart enough to want to come in September and start saying, hey guys, I think what we should do is get out of this place and, restructure our business to make things easier. But this no objection coming in is from SEC forces them to look at the other options. Because I remember that the extraordinary meeting that they had, that was on Monday, came out with no clear resolutions as to how to move forward concerning the issue of the negative FX, the large FX positions that devaluation, the impact of devaluation of FX has caused on their profitability. And so that's really a major concern. But with this no objection, I can just imagine them wanting to come back into the market, perhaps considering other options, perhaps exchange for debt or equity. Options could be also there. Perhaps they may even come in to have a rights issue just to boost and cover up for the losses and the negative impact that the devaluation would have upon.
And it's really the time to think outside of the box now. One of the scenarios we also saw highlight as well how we're seeing going back to banking stocks is also the re-strategizing here that we've seen, especially for banks as well, with those having offshore subsidiaries on the back of the FX reforms that we've seen so far. Now a whole lot of focus is also now being placed on the next MPC meeting. Some have said, well, we'll see a more conservative rate hike, say 50, 100. Some are taking a much more hawkish stance, saying about 200, replicating what we saw in the January meeting. For you now, in terms of sectoral sensitivities to this higher interest rate regime, how do you think things will pan out, especially when we're looking at manufacturing, for example? You saw Q1 GDP numbers. We're waiting for some other numbers to come through and forecast here. How do you see the sensitivities reflect?
Well, one thing that is certain is this. The majority of the indexes that will really take a brunt of this is obviously the consumer goods sector. And for them, it's more about acquiring machinery, to help with expansion of their products and all of that. So they would significantly be impacted by that. The banking stocks also will take a hit, but not so significant because of the ability for them to retake other positions to protect them from these exposures. And I see that basically industrial goods will also suffer same fate, and it's really going to negatively impact most of these companies now. And going to the MPC, I believe strongly that this meeting is not going to be a meeting about raising rates anymore. I believe that the CBN government...
You think a hold stance is going to
No, I'm more of, yes, they may just raise it up by about 50 to 100 basis points, but beyond that, I think more focus will be given to perhaps other intervention programs that should help and support the oil manufacturers, basically, so that the impact of the devaluation, the impact of the high interest rate doesn't translate into affecting these companies. Because just to, even for insight there, is that if with this increase and the recent inflation numbers coming out at 31.70%, there's definitely going to be a reason for them to come back to the drawing board and look for ways for these the impact of the interest rates to permeate into the economy generally and really set the pace for the economy, not into negative tempo, at least to taper down inflation, pay a little focus more on food, and address that to see that these numbers are actually being
we'll definitely keep our fingers crossed to see how things pan out. They meet next week, and then we'll definitely have more conversation as to how this also has near-term and middle-term impacts on the market. Joshua, thank you so much for doing this afternoon with us today.
Thank you very much for
That was Joshua Chinga, sell-side analyst at EDC Securities.